Stocks trade soft but ranged as uncertainty over policy moves and economic factors loom. Consumer durables perk up today on festive sales, but metals slump.
Strong sales growth and a better product mix make the Titan stock sparkle. Even Kalyan Jewellers scales to a new high on the back of healthy sales in India and the Middle East.
Hero MotoCorp gains ahead of the launch of its electric scooter Vida today, and also a brokerage call suggesting multi-year double-digit growth for the sector, and a price upgrade also buys the stock.
The rupee falls to a fresh low of 82.4 per dollar, pressured by dollar strength and the 9% rise in crude prices this week. Bond yields are also up, and the 10-year bond yield at 7.5% is the highest since June.
Hello and welcome to Business Lunch. I'm Nisha Poddar, and with me, as always, is my colleague Pavitra Parekh. So let's begin with the markets, and I've got the color again wrong. I thought it was Friday and it could be a little more cheerful mood, but no luck on that one. Take a look at the markets. It opened on a nervous note and got more nervous. In fact, at the moment, the tick is at 17,267 level, which is lower than what the market really opened in the morning for. As far as the overall sentiment is concerned, well, the mid caps are the ones which are taking a bigger drudging. So the smaller companies are really seeing a sell-off. And on the other hand, Bank Nifty in nervousness, and especially because of the rate tightening cycles and also the views coming in from the central banks across the world, is really weighing on the banking sector, over 1% down in trade at the moment. So there's no surprise that advanced decline ratio, though, is maintaining almost a neck and neck, but still in favor of the declines at the moment. Titan is one counter which is really going against the tide. It is the Titan of the day today, almost 5% up in trade. Some of the auto counters, along with Bharti Airtel, are performing very well, along with some pharma counters. But banking and metals, which had a good day, some of those are really lackluster in trade. Pavitra.
Oh, absolutely. It is a bit of a down day because, you know, we do have that global queue that we're all awaiting. So we'll react to it, of course, on Monday. If you take a look at the rest of Asia also, by the way, it looks quite soft. So Hang Seng, Taiwan, a few of these markets will come up. And the cuts are, of course, much steeper over there, as you can see on your screen. So we're waiting by for that big global queue. In terms of what's holding up, like Nisha mentioned, it's the auto pack. Some of the auto-related stocks, the likes of Autoline, you have Omax Auto, Pricol, all of these also holding up very well. Those are actually seeing some solid gains right now. Reliance is another one which is managing to hold in the green and lending some support to this market. On the downside, it is banks and metals after the sort of big run that we saw yesterday, like Nisha pointed out. In terms of cues, it is, of course, this non-farm payrolls data that we're watching out for. The rupee has moved to 82.35 versus the dollar, so that is something that we're tracking very closely. And then the earnings season kickstarts, so the entire IT pack will also be on our radar. So that's what's happening in terms of the market action. We'll keep coming back to this. But first up, let's talk about the individual stocks that we're tracking. Nifty, on the Nifty, the top gainer today is Titan. And this after they put out robust quarterly update for Q2. Mangalam is here to put all of that into perspective for us. Mangalam.
Indeed, it was a sparkling quarter for Titan this time around, and in a seasonally lean quarter, Titan's done extremely well. What's really stood out this time around is while their overall sales grew by about 18%, the mainstay of the business, the jewelry business, also grew 18%, and that was despite a high base. Remember, the same time last year, the jewelry business actually grew at around 66%. So on top of that, an 18% growth means that over the last 2 years, the jewelry business has compounded at around 40%, and that is something that the street likes. The other factor that the street likes is that, you know, the pure only gold business, which is low margin for them, has actually grown at a slower clip, and the high margin studded business has actually grown much faster than the overall business. And as a result of which, the margins are likely to be better this time around as well, because studded share is higher than last year, even as it is below pre-COVID levels. The fact that it is trending towards pre-COVID levels is something that the street likes. Apart from that, they believe that, the third quarter and the fourth quarter, which are seasonally stronger quarters for jewelry players because of the festival and the wedding seasons, are looking much better. The company is optimistic about the footfalls and demand out there, and as a result of which, they've expanded their store footprint as well. 25 jewelry stores added in the second quarter, And for the overall business, they've added 91 stores as well. The other parts of the business, the watches business, the eyewear business, as well as Carrot Lane, which sells a large part of their jewelry online, has done extremely well. And finally, we've seen good growth coming in for their saris and other verticals too. So all of that basically doing well for Titan, and we've seen the way the stock has reacted.
All right, so the business update looking strong. But Mangalam, what about Dabu then? That is really trading lower in trade, giving out cautious guidance of mid-single-digit revenue growth going forward. Give us the full picture on what they've stated.
Well, can't say the same about Dabu as far as optimism is concerned, because this time around their consolidated business grew in mid-single digits, and that was led by the Indian business, which grew in mid-single digits as well. The stock is sulking in today's trading session after having fallen 4 to 5% in the last 5 trading sessions as well. And that's primarily because if you just take a look at the internals, they're actually not bad, but some of the problems are on account of high base and geopolitical problems that the company was facing in Turkey as well as Egypt. So let's talk about individual segments of the company. The foods business did actually well, double-digit growth on a high base of 43%. We did see good growth coming in for their home and personal care business as well on a high base of around 17%. That has grown mid-single digits. But health portfolio is the one which has been muted, and that's primarily because the same time last year, the demand for health products was much more because of COVID, and as a result of which we will see some muted performance out there, and that is weighing down on the overall revenue. What's also weighing down on the overall revenue, that despite strong constant currency growth, the sharp currency devaluation in Egypt and Turkey would mean translation losses for their international business, and that would impact their performance as well. The other factor that will stand out is the margins of the company. Even though they will improve sequentially and are likely to improve in the second half a lot more, year on year, there has been a dip of almost 150 to 200 basis points on their EBITDA margins.
All right, Mangalam, thanks a lot for taking us through all of the details. So the Dabu stock is off the lows, but it is still seeing a cut of around 1.5%. Let's move back to what's doing well then, and it is the auto stocks which are buzzing around today. This after brokerage house Jefferies came out with a big upgrade on the sector. So Sonia is here to tell us about that. Sonia.
Well, thanks a lot for that. There's a big upgrade that has come in from Jefferies on the entire auto sector. They expect a 17 to 19% growth for the entire pack, passenger vehicles, two-wheelers, as well as trucks, over FY 22 to 25. They also talk about how the margins are expected to improve as raw material costs have fallen quite a bit. Now, double-digit earnings growth is expected on a compounded basis for most OEMs. That's because the entire sector has come off a very low base. The last 5 years, the auto sector has virtually not grown, and now there is a big comeback, especially because of a pickup in demand, as well as most of the supply side issues getting eased out. They prefer stocks like TVS Motor, Maruti, Eicher and Tata Motors. They still have an underperform on some of the global-led OEMs like Motherson Sumi as well as Bharat Forge. But their top pick and the stock which they upgraded this morning is Hero MotoCorp. They upgraded it to a buy. They have a target price of 3,000 rupees, which is well above the current market price. And they say that Hero MotoCorp is coming out of a big bear market, and there is an uptrend expected due to electrification of vehicles. In that context, Hero MotoCorp is launching its first electric scooter, Vida, today itself. So that's the big theme that they're playing on. Overall, a large upgrade for the sector. Back to you.
All right, Sonia, thanks so much for getting us all those details. Autos are also yardstick for the overall economic health, so watch out for that one. But remember, the rupee hits yet another low against dollar as crude prices rise. We get you all the details on this important macro factor after a very short break. Stay tuned to Business Lunch.
Hey guys, welcome back to Business Lunch. Now, a big news story today is the move that we've seen on the rupee. It opened at a record low today of around 82.2 versus the dollar, and then it's only dipped further today. Right now, it's currently at around 82.4. So Lata is here to tell us more about the factors impacting the rupee move as well as the bond yields. Lata.
Well, no surprises that the rupee is under pressure. It's a double whammy. We have seen both crude prices and the dollar strength pressuring. It usually doesn't move together. When the dollar strengthens, commodities weaken a bit, but crude is rising for its own reasons because of output cuts announced by OPEC+. And that's, a good 9%. If you looked at the October 2nd, last week levels, It was ruling at about 86 and change, and now at 94.20 thereabouts per dollars per barrel. The rise is substantial. The other set of people who are buying are those who probably went short dollar, anticipating that India will get included in the bond index and there will be dollar inflows. So those short dollar positions are also getting covered now that that inclusion is not coming. The big buyers, dealers tell us over the past 2 days have been oil companies. The Reserve Bank is supplying dollars, but it is not trying to move the exchange rate. It's apparently looking like supplying only where the demand is, or at the level the demand is. Actually, the Reserve Bank would be happy with a gentle depreciation of the currency because the trade deficit, especially with China, is pretty wide. And the Indian rupee has appreciated versus the yuan. So a depreciation would be welcome. What the Reserve Bank fears more is depreciation anticipation, not depreciation itself. Dealers are talking about 80 to 50 as possibly the next level where a defense may come, and 83. But these are just wild guesses, you know. There's always that expectation in round numbers like 82.5 or 83 where they expect the Reserve Bank will come and support. Just a word on the bonds. The yields have gone up. They've been going up continuously for the past 2 or 3 days. Again, for the same reasons, anticipation of bond index inclusion not coming through. I mean, now it is confirmed. The dollar index, crude prices moving up. And finally, US yields also moving up. So everything is pointing to higher yields. 7.5 is higher than the highest point in September. The chances are that it can even go to 7.62, I mean the 10-year yield, which was the highest we saw in June.
All right, Lata, thanks so much for getting us all the details, and all eyes would be on the rupee movement going forward as well. But another important development which is going to have a huge impact on the stocks in focus is the MSCI's November 2022 semi-annual index review that will be announced on the 10th of November. Now, Vivek is here to tell us more about what to expect. Now, Vivek, individual stocks will see a huge amount of fluctuation, volatility because of the inflows and outflows. So which are the inclusions and exclusions which are really expected?
Well, that's right. Now this particular index review of the MSCI is going to be important. So, quantitative analysts have actually started penciling in their expectations in terms of what exactly do they expect in terms of the stocks that will enter either the MSCI standard index, the larger one, the much more tracked one, the widely tracked one, and the one that generally has a larger impact in terms of the stock price movement, and also the MSCI small cap index. So now what we have is we have the list of expectations from IIFL Alternative Research, and the list of stocks that are likely to make it depending on the stock price movement from now till November 10th is the list that we have and that we are looking at. So some of the stocks we are looking at is Tube Investments. This is a likely inclusion. $204 million is the kind of impact inflow that could come in. Indian Hotels, again, a high probability inclusion. $190 million inclusion or inflow is what we can see. Ashok Leyland, again, this particular stock has been an outperformer. Some amount of, market activities already pricing in this inclusion, $163 million. TVS Motor, Schaeffler India and Astral, these are the stocks that will make the move from the MSCI small cap index to the MSCI standard index. Now, some of the stocks, individually that could come in and which aren't right now looking like, but what analysts are penciling in, Hindustan Aeronautics, ABB India, Varun Beverages and Bajaj Holding. These are some of the stocks that could make the cut as far as the standard index is concerned. Exclusions are IGL and Biocon, which is what you could actually see in some amount of decent underperformance. In terms of the MSCI small cap index, some of the likely inclusions, high impact names are the ones that we are looking at. Vedant Fashions, Metro Brands, Sansera Engineering, LG Equipment, Escorts Kubota, as well as Campus Activewear, and some of the some of the stocks that could be out of the small cap index are Spicejet, Gujarat Fluoro, and Kaveri Seeds.
All right, Vivek, thanks a lot for getting us that entire MSCI index review that we have semi-annually. But with that, we're going to get into a short break now. On the other side, the World Bank has cut India's GDP growth estimates for FY23 as well as FY24. So we get you more on that after this short break.
Welcome back. You're watching Business Lunch and take a look at the market. Yes, the market is looking quite tentative again and the volatility is there. So in fact, after a certain bit of recovery, Bank Nifty has again lost more than 1% in trade. In fact, some of the bright counters like auto stocks have lost some ground from the top at the moment. So if you really look at some of the counters like Bajaj Auto, Hero Moto, they have lost it from the top of and have seen some sell-off. As far as RIL is concerned, the big boy had been contributing positively still in an otherwise weak market, has seen some bit of profit taking, as well as other counters like Coal India as well as NTPC. But Bank Nifty is the one to be kept on the watch list. Moving on then, let's really talk stock-specific action. And we are talking about the general insurance sector on the whole. That has also released the business updates for the month of September, and how the quarter could really look like can be one of the estimate from that. Yash Jain is joining us with the entire roundup. How's been the month of September, Yash, for general insurers?
Well, Nisha, the month of September is not something which the general insurance industry would want to remember. We've been seeing strong growth up to the month of August in the general insurance industry, but the September month has got a pause as far as that strong growth is concerned. The industry premium, that has grown just by about 3% in the month of September on a year-on-year basis. The year-to-month premium, that is up 15%, and that is largely on account of how the industry has been performing till August. As far as standalone health insurance industry is concerned, that has seen a growth of 24% in the month of September on a year-on-year basis. Year-to-month premium is up 27%. Now I'll talk about individual companies. ICICI Lombard, September premium has just grown by about 2%. And that's why the stock is also down in today's trade. FY23 year-to-month premium, that is up 23%. Now that is again, as I said, largely because of the kind of growth which the company's seen up to August, which gets rebalanced in the month of September. New India Assurance, the premium is in fact down by about 15% in the month of September on a year-on-year basis. Year-to-month premium is also up just by about 3%. As far as Star Health Insurance is concerned, September premium has grown by about 8.5%. But compare this to the industry premium, which is up 24%. So Star Health also underperforming the industry growth. FY23 year-to-month premium for Star Health is up about 22%.
All right, Yash, thanks a lot for taking us through that complete roundup of what September has looked like for the general insurance companies. But with that, let's move on and also bring you some news on the macro front. The World Bank has cut India's GDP growth forecast for FY23 by 100 basis points. This is to 6.5% now, and they've also revised the FY24 growth target lower by around 10 basis points to 7%. Now, the bank has also said that exports and services in India have recovered stronger than the rest of the world average, and that India's ample foreign exchange reserves will serve as a buffer from external shocks. So that's what the World Bank has to say on India's growth picture. In fact, let's also listen to what World Bank Chief Economist for South Asia, Hans Timmer, had to say on the latest forecast.
India is still doing relatively well, although it was also downgraded 1 percentage point since June, with now the forecast of 6.5% GDP growth. Again, a slowdown as we see in the rest of the region. India has the same problem with the rising commodity prices, rising input prices, and also the tightening of the global financial markets and weaker demand abroad. As a result of that, we expect that the second half of this calendar year will be relatively weak also for India.
All right, more coming in from the global commentary. Well, IMF chief Kristalina Georgieva warns of greater recession risks ahead of the fund gets set to trim its global growth forecast at its annual meeting coming up next week. So next week is going to be important. Note that as early as the month of July, the fund had cut its growth outlook for this year as well as the next year. Listen into the excerpts from the IMF chief's conversation with CNBC.
US still holding better, but momentum is slowing down. Why? Because interest rates are starting to compress demand and also to weigh on investments. And in this environment, inevitably the world economy is also slowing down. We are calculating that for 1/3 of the world economy, this year and next year there would be 2 consecutive quarters of negative growth, and that the risks of recession have gone up.
All right, that is the word coming in from the IMF, that the risk of a recession has only gone up as momentum in growth globally continues to slow down. But that's all that we have time for on this edition of Business Lunch. The market is currently down around 70 points. So that's what we're seeing in terms of the Nifty. The Nifty Bank is where a lot of the pain is coming through, over 1% lower, 450 points gone on the Nifty Banks. So keep your eye out on the markets. We're going to wind up here, but Mid Cap Radar comes up next, and they're tracking all of the action.